Hello and welcome to NDTV Profit. I'm Vishwanath Nair and you're joining us on this special conversation around the new tax bill. Now, earlier today, the Finance Minister Nirmala Sitharaman tabled the new tax bill in the Lok Sabha. After that, a special committee is being formed which will go ahead and review the bill, and then the bill will come back again into the Parliament for passing. But a bunch of changes that are being announced in the current new tax bill, first of which is about reducing the size of the entire tax bill. The new tax bill contains about 23 chapters, about 530 odd sections and 16 schedules. It has been brought down from over 800 schedules earlier. As part of some of the changes that are being brought in, first and foremost is the introduction of something known as a tax year versus what was earlier called an assessment year versus a financial year. Alongside that, the new tax bill also talks about better definition for virtual digital assets and how the taxability works. It talks about retaining the old tax regime so that people have a little bit more room to sort of adjust their entire taxation plan for the year. But of course, without further ado, I'm going to introduce my guests for the day. Puneet Shah, partner at Dhruva Advisors, Himanshu Parekh, partner and head of tax West Division at KPMG in India, and I've got my legal expert Gauri Puri, partner at Shardula Machand Mangaldas & Co. Welcome, ladies and gentlemen. So, Mr. Shah, this question is with regard to where virtual digital assets, the definition and the clarifications that have been provided in the new tax bill. Considering the fact that right now we do not have any legal standing or legal sort of legislation in place to govern virtual digital assets, but we do have a plan to tax them or earnings from these assets and how to tax them. I just wanted to get a view as to what this new tax bill does for something like that, because it's bringing that slightly modern approach, considering the fact that the last act did not really have any space for a virtual digital asset as such.
I agree. It's an anomaly between different laws. Today, exchange control regulations are a bit silent, or as such do not permit investment into virtual digital assets. Residents, of course, can do it freely. So that's an anomaly between the regulation as well as the taxation of the VDA. However, the law, as and when an investor makes an investment into a VDA and it gets gains out of it, the law is very clear. The tax law is very clear that it will be taxed at a highest rate. So there's no anomaly there. The taxation provision till now has been very, very clear. And the new income tax bill just clarifies it. It just consolidates all the provisions concerning VDA. However, there is no significant change as such so far as taxation of VDA is concerned.
All right, Mr. Shah. I want to jump on to Mr. Himanshu Parekh. Mr. Parekh, the one question that people in the newsroom also had was with regard to where we are in terms of assessment officers and the powers that have been granted to them under this new tax bill. I wanted to get your view. Do you think that these are a little bit more far-reaching?
According to me, the powers which have been granted to the tax officers under the new bill are pretty much consistent with the powers that they had until now under the present Income Tax Act. So there was a series of powers available to them under the law, which is to conduct an assessment of the tax return of a taxpayer, which is to conduct TDS or withholding tax proceedings against a taxpayer, which is to call for certain kind of information or clarifications from the taxpayers. So those powers are pretty much consistent with the powers that are currently available to them under the current Income Tax Act.
Right. I have with me my colleague Shrimi Chaudhary, is joining us from Delhi. Shrimi, I hope you can hear me. But you know, you've had a chance to look at the entire bill. I wanted to get your view firstly on a bunch of changes being announced in the new tax bill compared to the old tax bill, slightly modernizing the entire conversation. Is this the best one could have hoped for, or do you think that maybe something got missed?
I mean, of course, there are hits and misses, and I would like to start with the hits first, of course, because there are lesser sections, subsections getting merged with the main sections. In fact, you know, a lot of emphasis on the cross-reference of sections, which has been there and accumulated over years. So now that has been done away with. Other than that, important aspect is here that they are changing, you know, assessment year, replacing assessment year from tax year, which is in line with the global practices. And other than that, as you rightly mentioned also, Vishy, about virtual digital assets, so no amendment or changes in terms of taxation, but there is a proper definition being clarified in the new bill that is there. Apart from that, if you see, there are a lot of dispute resolution panel, they've been talking about how to sort of streamline that, how small taxpayer can make use of that. So that, streamline being done in the new bill is what we can, gathered. Other than that, you see a lot of changes in terms of anti-avoidance and NRI's rules as well. They have kind of tightened the monitoring rules because there are instances of misusing the tax treaties, etc. So that's why they're kind of, tightened there. Old tax regime is one of the contentious issue, and they've been talking about whether they will phase out in the new tax regime, but no, it's going to coexist even in the new bill. As long as misses are concerned, there is no major policy change is there in the new bill. In fact, even if you see the sections and subsections, there is not substantial changes or removal of such sections are there. So they try to sort of retain the structure of the existing Income Tax Act, and it's more of a review sort of exercise rather than having a overhaul of the direct tax laws.
Right, Shimi. I wanted to bring in Gauri Puri in this conversation as well. Gauri, one of the things that have been widely discussed is the level of litigation and pending cases with respect to specifically direct taxes. The number that we got was, as of currently, about 5.6 lakh cases, 10.4 trillion rupees worth of cases still stuck at the CIT. I wanted to get your view. Do you think that maybe the rules that are being discussed at this point in time within the new tax bill, would that make maybe these handling such cases easier for lawyers such as yourself and people who are actually dealing with these issues?
Sure. Thank you, Vishwanath. I think at the outset, what I want to make clear is that both the Honorable Finance Minister as well as the FAQs that the government's just released, they very clearly set out that this is not meant to be a change in tax policy. Whatever we've had to see so far, because of course the bill's just come out, so the devil is always in the details, and more detailed reading is required. We haven't seen any substantive changes in the rules. It's basically been an exercise of rewriting the existing law to make it more readable, more user-friendly, and sort of get rid of redundant provisions, simplify and consolidate. If you see from that perspective, there hasn't been really any change which would result in lowering of tax litigations or resolving of existing disputes. It's not that they've come up with a new alternative dispute resolution mechanism. If anything, we have new language being introduced. So we used to earlier have this word called notwithstanding XYZ, these taxes will be payable. That's been replaced with irrespective. So you've seen, of course, every time you simplify and you consolidate, language changes. So I would expect that there would be, in fact, during the transition phase, an increase in litigation, because that always comes as whenever you sort of redraft or rejig things. But I don't think that at present there has been any change which would result in the litigation burden reducing. Of course, for somebody who's dealing with the Income Tax Act for the first time, there is definitely enhanced readability, but that's where I would stop.
All right. I'll request my colleague Shrimi to join in. If you have any questions, Shrimi, please go ahead.
Yeah, on the litigation management, there are a couple of changes being proposed, it seems, in the new tax bill. For instance, the repetitive clauses which has been pending in the Supreme Court and other judicial forums, they are sort of removing that. You think that, Gauri, that this is going to reduce the litigation we are seeing, which is close to around 5 lakhs at CIT appeals itself?
So, Shirmi, the way I would think about it is as follows. When you make a law less complex, because it's easily readable and two people understand it in the same way, yes, from that perspective, the scope for contentious interpretations decrease. But I think that there is a little bit of a mismatch in expectation. This is not a policy rewrite. It's not that you've suddenly sort of overhauled the Income Tax Act. So if we are talking about the existing disputes that are pending in courts because of legislative gaps or because of ambiguous interpretations, because they have some sort of a policy nexus, those will remain as they are. And for that, we need to go through the judicial process to see what the final outcome is, unless the government makes a policy intervention.
Right. Thanks for that, Gauri. Let me move on to Mr. Shah. Mr. Punisha, the question that I wanted to ask you was, certain changes that have been announced with respect to nomenclature, right? Something I mentioned earlier in this conversation was this concept called a tax year, which is being brought into the new tax bill. Things like this, when you try to simplify language and when you try to simplify ideas within the tax bill, do you think that has a bearing on how exactly tax laws are actually implemented and how people interact with these sections?
Yeah, I think I think that's a moot question, Vishnu. And that seems to be the main intention of the new Income Tax Act 2025. And I can give you a few examples, and then I'll just deal with whether it actually meets the objective, whether it actually helps reducing litigation or creating any simplicity. So a few examples are, as you rightly said, the term assessment year or a previous year is now replaced with the word tax year. So I think it's a step in the right direction. Clearly, it's very confusing to use the word previous year for the current year. I mean, it's not a normal nomenclature for any common man, right? So it just creates a lot of confusion. So that's a step in the right direction to simplify a previous year with the term tax year. It clearly helps. Then I think, as Gauri mentioned, instead of the use of the word notwithstanding anything contained in any of the provisions of the Act, it says irrespective of the provisions of whatever so and so. So again, it's a common nomenclature which is being used, and I think it substantially helps in terms of understanding of the law. So the simplicity has been the key objective of this rewriting of the new Income Tax Bill 2025. Another example is there are like provisos and explanations to every section. There are some 1,200 provisos and 900 odd explanations under various sections of the Income Tax Act. They are now removed and made part of the section itself. Now, only time will tell whether this kind of simplification is going to help in easy reading and understanding of the law. But there is an attempt to reduce the explanations and provisos and making it part of the sections. Then some of the redundant provisions like export related benefits, etc., have been removed. Like Section 80 HSC, Section 10 AA, they are all redundant now. So these kind of simplifications have happened. Some tables have been used for TDS rates, etc. Right? So these are the cosmetic. I wouldn't say cosmetic, but these are the thrust is on these kind of changes rather than the overhaul. There is no new provision. There is no substantive change in the existing provisions, but the rewriting of the law in a more easily readable and understandable proposition. That has been the crux of this entire new bill 2025. And I feel, yes, it should help going forward basis in terms of easy reading and understanding of the law, whether it will reduce litigation, whether it will reduce any interaction with the Income Tax Act in a more simpler manner. I'm not sure about it because the changes are more cosmetic and format related rather than in substance. That's my reading of the entire bill.
So, Mr. Himanshu, a lot of focus being seen on, tabular form in terms of TCS and TDS rates are more now in a tabular form. In fact, a lot of focus on the formula, coming out with a formula rather than definition. So how you think this stance will change, and whether this will add more taxpayer, because as the numbers suggest, until FY24, we have 104 million taxpayers.
So see, again, as Puneet mentioned, clearly this is a change which is meant to simplify reading of the provisions of the law. It is not a substantive change. So currently, if you go through the TDS provisions, for example, you have n number of provisions, and some of the provisions are quite complex in terms of reading, in terms of interpretation, and which lead to disputes and litigation. So what they are seeking to do is to simplify that, consolidate all the TDS provisions into one table and specify the rates of TDS vis-a-vis different categories of transactions. Now, this will make it easier for a taxpayer to ascertain what is the nature of transaction and what is the rate of tax applicable thereon. And this will result in a better interpretation of the law. This will result in lower disputes and will avoid protracted litigation with the tax authorities. So that's the objective of consolidating all the TDS provisions in a tabular form. And to my mind, this is a welcome move. This is a welcome move.
Yeah, so Gauri, this question is for you. As you know that, direct taxes almost contribute 6% in the overall GDP. In fact, for next fiscal year, the target is around 4%. Now, in the whole scheme of things, how you think that revenue is going to be impacted? Because if you see the revenue estimates also, budget estimates if we talk about for next fiscal, it's around 25 trillion. You think these measures, which is now being, in the form of bill, and of course it will take a year time to sort of being implemented, is going to impact the overall revenue, because that is the main sort of focus as well here?
So Shrini, if you think about revenue collection, it's a function of two things. One is your tax rate, and then the other is your tax base. Rate, the finance minister has been very kind this year. She's given this leeway to the entire middle class, by reducing the slab rates, by giving a higher rebate. On the tax-based side, it's taken a lot of work, and we must congratulate the government over the last 10 years to expand that base through number of measures like formalization of the economy, having numerous provisions like TDS, disincentivizing cash payments, etc. Because once everybody has a digital trail or an audit trail, your ability to avoid taxes or evade taxes reduces. Also, the more formalized the economy gets, the more taxpayers you get in the tax net. What this does, I would say, it's not the cake, it's probably the garnish over the cake. What this essentially does is that once you make a tax rule easy to comply with, the hope is that somewhere or the other that also sort of boosts compliance rates. Because, for example, if you see the TDS provisions, now that they're in a tabular format and they can be understood by smaller taxpayers or maybe by MSMEs, which do not have tons of advisors at their disposal, you would hope that tax compliance rates would go up. So while I don't think that this by itself would just boost tax revenues, it is one of the many things in the whole tax engine that should help in making our system more equitable and bringing taxpayers into the tax net.
Right, thanks for that, Gauri. Let me take a slightly light-hearted question. I want to talk to Mr. Shah and then again Mr. Parekh. Mr. Shah, to start again, when you began your career and you were looking at the income tax law at that point in time, and you were thinking about how you building a career in this space, do you think maybe the language that is being used now would have supported you, would have helped you at that point in time?
It's a difficult one. I'm not sure. I think I've been tax practitioner for the last 35 plus years now, and we have only seen one act, which is the 1961 Act. We're used to that language, and therefore, for Indians and Indian tax practitioners, anything which is not complex is not something which we can't understand. So it has to be complex for us to, get into the law. But If I look at the new provision, of course, we did not have enough time to go through this. It's just come today officially. So, but I would say the law. There is an attempt. There is an honest attempt to simplify the language, to reduce complexity, to enhance readability, to enhance the understanding in a easy way, by way of tables, by way of schedules, by reducing provisos, explanations. So yes, I think it should help going forward, at least to the new professionals who are going to read this law going forward basis. To my mind, I think it should be more reader friendly, more taxpayer friendly, more consultant friendly as well, going forward basis. So it should help in implementation of the law, administration of the law, and hopefully reduce tax litigation. It may slightly be wishful thinking because no substantive provisions have changed, whether relating to business profits, whether relating to capital gains, whether relating to penalty, prosecution, assessments, appeals. No substantive provisions have changed. So, not sure whether it will help in reducing tax litigation, but hopefully in easy readability and understanding of the law.
Right. I want to bring that question again to Mr. Parekh. Mr. Parekh, well, as a new tax professional, let's say, enters in this coming year, and this is the bill that they are presented with to understand the law, do you think that this makes things easier for somebody in your profession, or for that matter, somebody who doesn't belong to a profession but just wants to understand how taxation in India works? Do you think this makes it a little more understandable?
Yes, Vishwanath, I would think so. Be it for us professionals, be it for laymen, or be it even for the tax authorities. I do believe that the manner in which the new provisions have been drafted, they have tried to avoid lengthy sentences. They have simplified the drafting of the provisions. As Puneet mentioned earlier, they have done away with these explanations, provisos, etc., which definitely enhances the user friendliness of the provisions, which enhances the readability of the provisions. And therefore, to my mind, it will definitely be worthwhile for any new student of the income tax law to be able to read this and comprehend it in a better manner as compared to the way we used to read it in the past.
Mr. Parekh, thank you so much for that. And with that, ladies and gentlemen, we will come to a close on this discussion. Thank you so much, Puneet Shah, Himanshu Parekh, and Gauri Puri, for joining us on this conversation. And of course, thank you to my colleague, Shrimi Chaudhary, who's joining us from Delhi to talk about it. So that's where the new tax bill's verdict is at this point in time. No substantive changes on the actual law part, but things have become a little bit more easier to understand for tax practitioners, the layman, as well as tax authorities. Thank you so much for watching NDTV Profit. Stay tuned for more news updates.